In this video, I'll be doing a live trading session on my funded account, a $20,000 account with my Forex fund. I'll be showing you everything that I do when I'm in the trade. You'll be able to see everything from the beginning to the closing of the trade, which means you'll be able to see how I manage my trade, why I move my stop loss into break even, why I cut the trade early. You'll be able to see everything. So it doesn't matter if it's a win or a loss, I'll be showing you every trade that I take. My goal for this account was to reach 4 to 5%. However, I ended up reaching 7%, which is really good. I'm really grateful for that in only one night. So I'm done trading the account. Now I'm waiting for my payout. I have to wait a month for the payout. It's been 11 days already. So stay tuned for the live trading and let's get into it. Hey guys, so this is the first trade. As you can see, G is on the CHF This is the first trade on my funded account. As you can see right now, I took a buy because we're doing high highs and high lows on the high time frame. So when the price is doing high highs and high lows, all you want to do is take buys because that means the trend is bullish. And when the trend is bullish, you only want to take buys. You don't want to take sells. You don't want to counter trade. So as you can see here, that's a buy. I will do a breakdown video. I will also do a breakdown after each trade has been closed, as you can see. So I will explain why I took the trade. Right now, as you can see right now, that's a recorded video. I recorded every single trade I took. I am gonna do a voiceover of how I was feeling during those trades, like why I moved my break even at some point, and also how I was feeling every time I saw the price reacting during my trade, during those trades. So this is the first trade. Let me fast forward a little bit. So the trade was going nicely, really. After that rejection here, that doji here on the M30, I was really, really confident about the trade to keep going up and going towards my take profit. So let me fast forward a little bit. I think the trade took some time to take off. Spend a little bit of a lot of time during around my entry. As you can see here, the trade started going up, volume started kicking in. I was really confident, so I kept holding trade. Let me fast forward. So here I was deeply into profit. As you can see in the M30 here, the candle closed I think just right at the body of the last high. So that's how I know there was a lot of volumes. So I knew I could let the trade run, because if the trade, I see that the trade is not, there's not enough volume, I took a buy and the trade is spending a lot of time during going up, going down, being around my entry, I would look to close. As you can see here, I didn't look to close yet. I was still in the trade because I was really confident. When you take the trade, you have to let the trade run, be confident about it, and let it breathe. Because if you don't let it breathe, you're gonna cloud your judgment. That's why I don't really stay in front of the chart after I take a trade. I like to go do another stuff. For example, when I took this trade, I went to cook because I had to cook. It was, as you can see during the recording, it was 9 p.m. in the night. So I had to cook and eat something. I was really, really hungry. So I went to cook, ate something. I just checked my chart every 30, 20 minutes. Or maybe if I don't want to do that, I just put some alerts, and when my alerts has been triggered, I get a notification from TradingView So I come and check my chart. You don't have to stay in front of the chart every time. You see, because if you stay on the chart every time, you're gonna like mess up with the trade, and you're gonna maybe end up making a big mistake, maybe closing the trade early, or maybe you know putting your break even too early. It's stuff like that. So let me fast forward a little bit. So as you can see here, I was waiting for the price to close below that high here with the body, so I can put my break even. Because here, like the price can just come back to a little retest when my entry and maybe stop me out if I put a break even. So I was waiting for the price to close above those highs here to put my break even. As you can see, you will see that after the price close above here, close above I that last high here on the M30, I put my break even. Let me fast forward. You see the price close above, right? I wasn't in front of my chart yet, but you see that I put my break even. You see soon that I came to put my break even. Okay, there it is. It was around here, I think. Um, yeah, you see in a bit. I think I wasn't in front of my chart for this one, but um, I put my break even like I'm I'm waiting for that. I don't know. Let's wait. Why is it taking so long? As you can see here, I moved my break even. I moved my stop loss to break even, right? And I waited. I put my stop loss to break even, and I waited, and I let the trade run. I don't mess with the trade. There's enough volume. There's good volume, so I was like, let's keep it rolling, right? So I was in the trade. There was a good volume. But as you can see here, that blue line here, it was a place where I can expect the trade to reverse on me. So around that area, I was really, really cautious. If I see something I don't like over there, I'm gonna cut the trade. That's how I was feeling at that time. Let's fast forward. You see the price was really, really reacting at that place. Like get like crossing above, coming back below. So I was a little bit skeptical, you know. So I was waiting for one reason, to one like any good reason to call the trade, because I was already up 1%. And 1% on the funded account is already a lot. You feel me? Like for example, if you are up 1% on a 200K account, that's $2,000. Yes, on a $20,000 account, it is $200, but $200, that's already your investment back, your investment that you put to buy a $20,000 account challenge with my Forex fund. With my Forex fund, the $20,000 account is $134, which means if I do 1%, that's $200, right? And I was already above $200, above 1%. That's like 1.5% right now. $200 is 1.5%. So because I'm every time I'm already up over 1%, I'm looking to close the trade if I see something I don't like, right? Because that's already a lot. Imagine making 1% every day. You come on the chart to make 1% on Monday, Tuesday, on Wednesday, Thursday, and Friday. Let's that's 5%. But let's say you don't make 1% every day of the week. You come on Monday, you make 1%. Tuesday you lose 1%. On Wednesday you lose 1%. Thursday you make 1%. Friday you make 1%. You're up 3% for the week. 2% every week, that's 12% a month. You see, that's that's a lot. Imagine making 12% a month, which means that's like 12% every month in a year. That's a lot. You see, you don't really have to make like 5% or maybe 3%, 4% every single trade. That's not realistic at all. At all. That's not realistic. What is realistic is like making small profit, but consistently. You feel me? And over a period of time, you will see that you will make a lot of money. Trust me. So let me fast forward a little bit so we can see the price was stuck over there. And you see the 15-minute candle closed below that place. So I was really skeptical. I was only waiting for a reason to close. And you will see that I closed the trade. I closed the trade because I didn't see something. You will see the next candle. I didn't like the way we closed, so I closed the trade. But I was also ready to wait and see if you can have a continuation. And if you can have a continuation, I'll be in the trade too. I will take another buy with a better risk reward. And yeah, so let me fast forward. You see that corner right here? This one, you can say that it's a retest, but I wasn't feeling it because like we kept rejecting that area here. So I'm like, am I really going to risk my profit that I already made? That's like 1.5%. That's good. Like that's already good. So I was like, I waited for the price to close. And I was like, if it close below here, like in those, like if the body close here, like below all this area here, I'm gonna close it. That's how I was feeling at that time. So let me fast forward. So as you can see here, I saw the candle closed below here. So I was like, nah, I'm out. I didn't like the way we reacted at that place. I said, I'm out. That's 1%. That's already good. And you can see even I moved my break even above. Like it wasn't um at my entry anymore. I moved my book even more into profit just in case the price reverse like immediately, because you never know. You can be in a trade up 1 to 2 risk reward and the price completely reverse against you. You will see that I wasn't in front of the chart yet, but you see that I came in, I closed the trade in a few. You see, yeah, I'm close the trade, good. I closed the trade on this one and I waited, and I was still waiting for the price. If the price wants to continue, I was still waiting. If the price start breaking above here again, I'll be in and put my stop loss around here and target the 1 to 3, because I always target the 1 to 3. Um, so let me do a breakdown for this one, and we will come back for the second trade. As you can see here, like I was saying, you see that you will see the price. Let me use this. You see the price was making higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. And this was a major retracement, which means we can expect the price to continue up, right? You can expect the price to continue up here because we are already in the bullish trend, right? We are already in the bullish trend. And if we are in the bullish trend, we only want to take buys. Remember, the trend is your friend. So if you only want to take buys, we wait for a perfect like opportunity to take buy, right? So I was waiting for the next candle in 4 hour close above this area here. You see this area? I was waiting for the next candle, 4 hour candle to close above, retest and go higher. So let's see the next candle. See, we close above. After we close above, I was waiting for a retest. Let me delete that. After we close above, I was like, okay, let me go on a smaller time frame to find um an entry, because we close above. That means like maybe we are ready again to go higher. So let's go. So let's go on the lower time frame. As you can see here on the lower time frame, you're above, right? So I was waiting for an entry. Boom, boom, boom. And boom. That's our entry right here. You see, we retested that 4 hour line right here, where like we close above and we had a strong push. That means like we want to continue, at least maybe like not maybe like on the long term, but on the short term, we want to see more price. We want to see the price going up more than that. So I pressed my trade. I was waiting for the price to retest here. I was waiting for the price to retest at least here, because we already have an indication that we want to continue, right? So the price kept going up. I didn't get a retest yet. The price came back and boom, we are triggered. I took an entry here, my stop loss here, 1 2 3, and just waited. Boom, 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 boom. Let me go in 15 minutes. Yeah. And I closed my trade after this candle here. You see, I closed my trade for a risk reward of like I said, 1 to 1. Wasn't that bad. I was up 1 to 2 at most, almost 1 to 2, and price gave me an indication that I didn't like. So I just closed the trade. So that's the breakdown for the first trade. Let's continue with the live trading. So this is the second trade, as you can see, second trade, and as you can see, I said when the price was gonna cross above here again, I'm gonna look to take buy again. I waited for the price to close above on the 5 minute time frame. I will show again in the breakdown after the trade has been closed. I was waiting for the price to close above, and I saw a continuation on the 5 minute time frame. I said, okay, and I'm in, basically 1%. When the price closed above on the 5 minute time frame, I took a buy and put my stop loss way below the last low on the lower time frame. I'm not gonna lie to you guys. When I take the trade, it was a little bit riskier than my other trades, because that's the 5 minute. I only look at the 4 hour, 1 hour, M30, and 50 minutes. I really rarely go on a 5 minute time frame to find an entry. But I saw that there was a good amount of volume, so I was like, let's risk it. I'm already up 1% anyways. So if I lose, I'm just coming back to break even. It's not that big of a deal, right? So I took the trade, and as you can see, the price started going down at first. But let's wait and see how the trade unfold. You will see how the trade went. And I targeted 1 to 3. So let me fast forward for you guys to see. You see, I really like how the price reacted here. Hold on. You will see there is like almost 30 seconds left. So I was waiting for the price. If that 15-minute candle closed above, I mean, closed below here, maybe I would have looked to close the trade. But I was like, if the candle closed above that last high with the body, I'm gonna wait and keep riding the trade and wait, just wait. And fortunately, it closed above. I was glad and I waited. Closed above with a strong push, a good amount of volume. So I was still in. Let me fast forward. Now the next thing I wanted to see if the price was gonna close above on the M30, because if you close above in M15 and then like M5 first, M15, M30, that's a lot of indication that the price wants to continue in my direction. So I was just being patient and I was just being attentive, and I was just being patient to see how the price is gonna move. So let me fast forward, and as you can see, the price started flying. You see that color in M30? That's a big ass candle, right? That's a big ass candle, and we like to see those type of candles when we are in a trade. That means that there's a good amount of volume. There's less and less risk that the price is gonna come against you, right? As you can see, I put my alarm here. That was like for my last TP, and because I saw that there was a lot of volume, I put my TP to another high. So as you can see here, there was a lot of volume. There's only like almost 30 seconds left, and there's a lot of volume kicking in. So I was really confident about that trade to continue in my direction. Some other people will say like, you should have waited for this trade a little bit more, so you'll be a little bit more into profit and all that. But if I say something I don't like, I'm already in profit. I don't want to risk my money. Like I already made it. Why would I risk it? I don't, it's good to set and forget, but not too much. You feel me? If you set and forget too much, you're gonna regret it. Trust me. I used to do that. I used to be greedy like that, and it's not good to do that. Trust me. So I was still in the trade. I let the trade run. There was a good amount of volume. You see how it's going up. I was really, really confident about it. But I didn't like how the price started going up without making it a wick here. So I was a little bit skeptical about it, but it was good. I just waited. Let me fast forward. So when the price came back to do a week, I'm sorry about that. But when the price came back and did a week, I was really confident. I was like, okay, let's just not close with a dodgy here. If you close with a dodgy, that's an indication for me that the price maybe restart, maybe do a retest and come and keep going up. So I was waiting to see if we are gonna close with a dodgy, and even if we closed with a dodgy, I would have waited because the M30 showed me that we want to continue up, and we close above those lines here. Those lines were important lines. I will show in the breakdown what I saw. But let me fast forward. You see, we didn't close with a dodgy, right? And you see that the way those candles were coming back to do a retest, it was like small candles. It wasn't like big candle like this with a lot of volumes. You see how the price coming back to do a retest slowly, slowly, and slowly. I was that's like put more confidence in my mind to keep holding the trade. You see, I don't cut the trade every time I see something I don't like. It depends on what it depends on what the price is showing me, right? And here the price is showing me that we are bullish. We have enough volume to continue up. So why cut the trade? You have literally no reason why to cut the trade, right? Also, when I trade, I don't really look at the profit like that. I look at the risk reward. Are we 1 to 1, 1 to 2, 1 to 3? It depends. If we are 1 to 1, I look at the chart to show me if we want to cut the trade or not, right? So the price did a retest. I mean, a retest, and we started going up again. So I was still in, waiting. And here, that's when I started like, be like, this is weird. Why are we coming back like this? I wasn't really comfortable about this one, but I was really confident. So I kept holding the trade. Let me fast forward. So now I was waiting to see if that 50 minute candle right here was gonna close the body above above the body of this one. And if it does, um that's a good indication for me to keep holding the trade, right? So I was still in. However, here we didn't close um above here, but I was still confident about that trade. As you can see here, I put my Fibonacci here, and I thought that we were retracing to the 61.8% of the Fibonacci, the golden zone. So I was like, that's a good indication that we are rejecting that area. If you are doing 1, 2, 3 candles where we are rejecting that area, that's a good sign that we can keep holding the trade. And see, guys, that like I wasn't in front of the chart every time for that. I was just saying, I was just coming back every 20, 30 minutes, 15 minutes to see how the price moved, because I take a trade on a smaller time frame, which means I have to check every like 50 minutes, right? So I put the Fibonacci and see like if we keep rejecting, that's a good sign. Let me fast forward. And now I was waiting for the next candle, 50 minute candle, to close above with the body above here. As you can see, my mouse here, above here. So I was waiting, and if the price closed above here, I was like, that's a sign for me to move my stop loss to break even and be risk free, so I can let the trade run and be like and be okay, and be like and wait to see if you're gonna hit the TP or not, or maybe if the price is gonna give me a reason to close the trade early. We fast forward. So we started seeing volume kicking in here, like good volume, and that's a good sign, right? And then I saw the price coming back. That's funny. I saw the price coming back below again. I was like, that's not the good sign. That's not a good sign. And as you can see here, when I saw that, I moved my stop loss into break even right away, because when the price start going like making new highs and coming back down and make like and change the candle into like bearish candle, that's a That's not a good sign. You have to be really, really on top of your game to not get attached to your trade and protect yourself, protect your capital, right? Let me see where I move my break even. Hold on. Okay, you want here. Oh, you want here. Let me put it here. And let's see. Go the one here that I move my break even. Let's wait. I think I moved it because I saw like we were like moving, like we're going up with a good amount of volume, right? So because we're going up with a good amount of volume, I think this one I didn't wait for the close. I don't know. But we were like in a good volume. So I was like, I'm already up almost 2%. It was here. I was like, this is good. There's a good amount of volume. Let me move my stop loss to break even. So I did that. Sometimes I don't wait for the close because sometimes when there's a good amount of volume, I don't want to see the price reverse on me like that because the price has been going up for a long time since here, right? So we can expect a retracement anytime because we are in a lower time frame. If you go in 1 hour, 4 hour, you can see something like a retracement at some place or something. So I was still in, and like I said, the price came back and we went back above again. And when I saw like we close above here with the body, as you can see here, above here with the body, I was like, I'm good. There's no reason to panic. There's no reason to manage your trade anymore. Let's let it run to the chippy. That's what I did. So let's find out what happened here. We continue with the good amount of volume. And I was waiting to see how the price was gonna react to that blue line here. If the price was gonna react like weird, like not moving high enough, like start rejecting a little bit, I'm gonna call the trade because I'm already up like almost 2.5%. 2.5% plus 1% on a funding account, money that you already made. That's not a challenge, that's not a verification. Or money that you already made, that's a lot. 2.5% plus 1%, that's 3.5%. On a 100K account, that's 3,000, that's 300, that's 3,500, right? That's 3,500, right? And on a higher account, that's even more, right? So I was still in the trade. I was waiting to see how the price was gonna react. When the price got there, I was like, okay. I was in front of my computer. I remember I was in front of my computer. I was like, okay, are we gonna continue with the volume, high volume like that, to go like to the cheaper, or are we gonna start doing up and down, up and down? And I saw that we started doing like up and down because it was an important place. I remember it was like that line was an important resistance. I saw that we started rejecting a little bit. I was like, I'm already up a good amount of profit. Let's not risk it. I think I closed the trade early. So let's wait and see where I closed the trade early. Hold on. It wasn't really far. Soon. I really wanted to let that trade run to the TP though. I really wanted to. Because sometimes you don't really want to mess up with your P&L because you have a strategy, you know how to trade, you have a certain win rate, you have a certain risk reward that you target, right? And if you mess up with those stuff in the middle, at the end of the month, at the end of the year, your results are not gonna be there, right? Because if you're already in a trade, you know your average win rate, you know your average risk reward. You don't want to mess with that. you want to trade, and you cut the trade only if you see something you don't like, or maybe if you're good, if you're happy with the profit. And I was happy with that profit here, right? That's like almost 5 times my investment in that account, right? Not even counting the first trade, right? So that was good. See, like we stayed at that place for a long time, right? For like 3, 4, 5 minutes. I didn't like it, right? I didn't really like it. And I was like, let's not be in the trade for a long time. We already reached an high, important high. So I think I closed it one here. Let me see. I don't know if I close it on my phone or on the computer. Hold on. Close it one here. Let me fast forward just to make sure. You see how long we stayed at that place? For too long, for way too long. Like, that's crazy. Hold on. So it was the one here that I closed the trade. Let's wait. We see that I closed the trade. I see close the trade with, I don't know, 500 something. Yeah. I really wanted to let that trade run though. Like, but I was too skeptical. I closed the trade like, yeah, $521. But what after I closed the trade, we started seeing the price going up, like going up and up and up. You will see after I closed the trade, the price went to close to touch my TP right after. But it wasn't really a big deal because I target the 123, and the 123 is like almost 600, because when you get to 123, there's also commissions and swap and all that. So just it was gonna be just below 600, like maybe 590 or maybe 580. So I didn't really lose that much. So I didn't lose anything. I won a good trade. So I was up. I was up. As you can see, my balance here. I was up. How much is that? 3.5%. Almost 4%. So for that account, I was looking to reach 4 to 5% and wait for the payout. And guess what? I was already almost 4% up, almost 4% on the first night. That's the first day I traded the account. You see there is a third trade, but let me do a breakdown for the second trade. So you guys, you see why I took the trade again. So let me go on a 5 minute. Like I said, I took the trade because I was up, because I saw the price continue on a 5 minute. So let me fast forward. After here, I was in. I think. Let me see here. Put my stop loss around here or something. Let me go check. 7.671. Okay, here. So almost a 17 pip stop loss. Target a 1, 2, 3. That's how much. Let me put the blue line. Um, there was a place here. You see that was an important place here as well. Let's go back. 826. Okay. So I took the trade because I was waiting for the candle to close above or something like that. But I thought that we were gonna continue because I saw that there's a good amount of volume here. So I took the trade again because I saw a good amount of volume and I was confident about the trend. The trend was up and there's no reason why I couldn't take it. There's no reason why I couldn't take that trade, right? And I was thinking like, okay, if I lose this trade, I will still be into profit. Like I was only risking 1% on this one, and I just made like 1.25% or something. So if I lose that trade, I was okay. So I was willing to risk that trade. So I was in. Let me go in 50 minutes. As you can see here, the price started going up like good. Was confident as you can see. And like I said, I used the Fibonacci here to see how the price was gonna react. And as you can see, we were rejecting the 61.88% of the Fibonacci, that's the golden zone. So I was really confident. I was waiting for the price to close above here, like I said with earlier, to put my break even. And when I saw that there was a good volume, I put my break even right away because you don't really want to lose the profit you already made. And if you are already in a winning trade, don't really risk that winning trade and let that winning trade coming back into losses again because that was a winning trade. It wasn't a losing trade. I know a lot of traders, right? They are almost right in the direction of the trade. They take a trade, for example, they buy or a sell, and they let the trade coming back against them and going to the stop loss. And they were up like 2%, 3% on the trade, like 1 to 3, 1 to 2, 1 to 4. That's that's not smart at all. I know people have their way to trade, but that's money that you're leaving on the table for what? If we see that the price is not it's not like going into your direction anymore, you see that it's coming back against you, the price is gonna give you the market is gonna give you a lot of reason to be like, the price it doesn't want to go in my direction anymore. Let me protect myself. Let me protect my capital, so I don't end up losing what I've risked because that was a winning trade. And when it is a winning trade, I like to put my break even and just wait. And let me fast forward. Let me let go. Okay, as you can see here, I got the trade the one here, 291. You see, like I said, right after I closed the trade want to touch my take profit, but it was okay. Like I didn't really mind. Really, I was okay. I was okay with that. I was happy that I won, and I was happy that it was a winning trade. Simple. Because sometimes like you let the trade come close to your take profit. Some people like let the trade come close to the take profit, and they want the market to close the trade automatically. Like they require the market to do that for themselves. Because sometimes you put your take profit there for a reason. That means like at that place there's a lot of reason why the market can return against you. So when you see that the price go there and the price started acting up, started slowing down, you have to get out because it is a winning trade. You already make profit on it, almost 2 R, 3 R. So why stay in the trade and let the trade come back all the way against you? That's not smart at all. I saw multiple people let the trade go into profit go into profit, close to the take profit, let the trade and wait for the price to close like at the take profit. And when I do that, sometimes the price, yes, sometimes the price go to eat the take profit, but sometimes it come back all the way against them, or maybe come back to touch the break even, and that's not smart. If you see that it is only 5 pips away and it is acting up, close it. It's only 5 pips or something like that. Me, I think it was like, let me guess, let me see. I think maybe it was like around here, maybe like 3, 4 pips. Like, why would I wait for that? That is, it is like, it's just not worth it, to be honest. So let's go to the third trade. Okay, the third trade. The third trade, I think I took it around 6 a.m. in the morning. 6 a.m. in the morning here, that will be in the New York session. So as you can see here, like I said, I was only taking buys because the trend is bullish. Why would I take sell? There's no reason for sell here. Some people, like, when they see the price going up, going up and up and up and up and up, they are expecting a retracement. Yeah, you have to expect a retracement, but don't expect to take that trade because it's only a retracement to go even higher, right? To go even higher to continue with the trend. So why not wait for the retracement? Wait for your entry, like, and continue with the wave, right? That's what I did here. As you can see here, every time that I take a trade, it is whether because we did, like, we went high, did a retracement. There was like my entry I took a buy here too. We went high. Like the last trade touched my take profit. I waited for a retracement. I waited for a good entry here. Like, we started acting up. I will do a breakdown for this one too, for this trade too, so you guys will see exactly why I entered the trade. And I waited and I took another buy. Simple. The price was trending up, so I only take buys. When the price turning up, only take buys. Only when the price take trade down, only take sellers. So I was in this trade. Let me fast forward. This trade didn't even take long, to be honest. I think it lasted like 1 hour or something. But let's see. So there was a good amount of volume kicking in. You see. So I was really confident. I wanted that M30 candle to close above with the body close above here, so I can put my break even. So let me fast forward. You see, there was a good volume here, like, really good. I was really confident. And as you can see, I moved my break even here because I saw that. Because let me go back so you guys will see. And I moved it. Okay, here. So I moved my break even because there was a good amount of volume, and when there is a good amount of volume like that, you don't want to see the price coming back against you like real quick, because that's like the last high, right? So when the price is like going up like that with a good amount of volume, you want to protect yourself in case the price start coming back right right after and come back to your entry. So I was there to protect my capital, to protect my trade, because that's already a winning trade. For me, a winning trade is like it is a trade that goes at least a 1-to-1 risk reward. If it goes at least a 1-to-1 risk reward, that's a winning trade for me. So after a 1-to-1, I'm like, let's let's protect my trade. As you can see here, move my stop loss to break even. Then I'm good. I don't have to manage anything right now. I just wait for the price to keep moving. Let the price breathe, do its thing. Simple. And there was still a good amount of volume. It kept going up. And Right after we close above here with the M30 candle, I was really, really confident. I was like, okay, there's no reason why we should come back all the way back to my entry. And if we do, I'm already break even. I'm good. But to be honest, when I saw the price moving like that on the M15 time frame, there were like way too many green candle. I mean, right now it's white for me because I like using white like this. For me, it's more clear. But for other people, for most people, it is red and black. I mean, red and green. And here, the white candle will be green candles. When I saw that green candles close above here with the body, I was really confident and I just waited. I just waited for the price to move and, let me fast forward. So here, I think I was like just making sure that, I was just making sure that if the price come back to these areas, I should pay attention to see if the price wants to reverse or not. Because as you can see here, those were important places where the price dumped multiple times. Like you can see here, like we dumped here, 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 like almost 4 times. So that place was really important for the price to reverse against me. So if the price get there and start acting up, guess what? I'm out of the trade. So like that. You just need to not um you just need to not how to explain that. You just need to not fall in love with every trade you take. You just have to keep your head up and see anything that you don't like. You're good with the profit, just cut the trade. You will never go broke cutting your profit. Never. However, you should cut the trade for a reason, not cut the trade because you don't like how the price is moving. Like even though you don't like how the price is moving, did the market give you reason to close the trade? Was it news? Was it like did the rejection at a major psychological level, something like that? For me, that's a major psychological level. And if the price acting up over there, I'm out. So let me fast forward. So there was a good amount of that day, you guys can see. And look at this. Look at this. When the price got there, got at that place right here, right? It was on like it was started flying. I was like, oh, let's go. I was like, let's go, let's go, let's go. I was really confident. I didn't want to be really in front of the chart for too long because when I see all grains candle like this, I'm like, there's no even a red candle. So that's a good amount. That's like a good sign of volume, but that means like we can start doing red candles anytime, right? So when the price got there, right, like it was only up. We didn't even start like acting up over here. We started flying. Let's watch. Like started flying. So I was really confident, waiting for the price to hit my take profit. Let me fast forward. Or maybe let's just wait and see. Let's just wait and see how the price move. You see that the price wasn't acting up over there. See, good amount of volume. You see, when the price move like that, there's no reason why you should cut the trade. You should just let the trade run, 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 run. I was already up like 2.5%. You see, my goal for this account was just 4 to 5%.
right? And with that trade here, that's like 6% already, right? No, that's 6% already. That's 6% already, and let's wait and see how the price got got the trade, so I will know exactly how much I made. I think it was about 7%, if I'm not mistaken. So if I'm not making a mistake, about 7%. So there was a good amount of volume, no reason why to call the trade. However, if I started the thing, the candle like coming back below, I'll be like, maybe it's time to close the trade. But the market didn't do that. The price didn't do that, so I was confident. Let's keep looking. But I mean, here and see. So I recorded everything. As you can see here, that's a video. That's like almost 6 hours of recording, live trading. I wasn't there to like talk and all that, but I couldn't be there to talk for like 6 hours. You see, so when you take the trade, just leave your screen, but put your alerts and just make sure that that you are there when the price is gonna move against you or not. So we are close to the take profit. Not gonna lie to you, if the price started arching up around here, I want to call the trade, to be honest. But there was a lot of room, so I was like, there's no reason why I should call the trade. I caught my trade twice already that night, twice. So I was like, I'm not continuing to trade. I'm waiting for the price to touch my take profit this time. And boom, because we touched the TP here on TradingView, but with the spread and all that with my Forex fund, you have to like really, really cross it, right? So you see here, we did cross it, but we haven't here, right? So I was still in, waiting, and I think the price touched TP here, and boom, we out. So that was a good trade. That was a good night, like almost 7% on the night. So that was good. As you can see here, I made like 6 points, like almost 7%. Almost 7%. You see, beautiful, beautiful, beautiful candles. Big, healthy candles. That's how I like to call them. Big, healthy candles. That's how I like to call them. So I made like, as you can see here, almost 7%. So I was done for the month on that account. Now it's time. Now it was time to go to another account and repeat the same process. When you just bought an account with any prop firm, you pass phase one, you pass phase two, you start trading the front account. Don't try to make like 10-15%. That's not realistic at all. Make 4 to 5%, even 1% is enough, right? To get your refund back, you get the refund back, and you get to keep trading the account. And now your account goes to bi-weekly payout. And instead of waiting for a whole month, you wait for only 2 weeks every time. And with my Forex fund, if you do that for a long time, I think if you do that for 3 months, you have to get five payouts, and you have to be profitable for 2 months. If you do that, you can become a VIP trader. A VIP trader can withdraw anytime. It's like a live account on your own, not on a broker. You make $100, you remove it. $200, you remove it. $200, you remove it. You don't have to wait 2 weeks or whatever. Because it is a VIP account, every time you make a profit, for example, if this was a VIP account, my first trade, after I close the trade, I made 200 something, I go on my dashboard, withdraw. The second trade, I think I made around $500. I go on my dashboard and withdraw it. You can withdraw it anytime. There's no limit on how many times you can withdraw in a day. If I'm not making a mistake, I'm pretty sure my brother is a VIP trader. His name is Financial Freedom FX on YouTube. If you guys want to check it out, or maybe I will put his link in the description so you guys can check out his channel. But he's a VIP trader, and every time he makes a good amount of profit, I think like at least 200, you remove the money. That's the mindset. You just have to do that. Like every time you make a profit, you withdraw it, and simple. So every time you make a profit, you don't have to risk it on the next trade. You already withdraw the money, and you're good, right? But I know become a VIP trader is not easy. It's really hard because you have to show consistency. You have to show that you make a lot of payouts. That means like I think it's 5 payouts, and be profitable on 2 months, in a 2 month time, I think. So to become a VIP trader with my Forex fund, I like the VIP program. It's very interesting. It really rewards consistent trader. I think my fund FX, my Forex fund, and now the fund trader is trying to do that too. So that's good. So yeah. So let me do a breakdown for the third trade so you guys can see why I took a trade, what I thought to take a trade. Let's go. As you can see here, because we are already going up, I just wanted to see a retracement into the golden zone, which is 61.8%, and started seeing upside from here, like started maybe rejecting this area, and started rejecting this area to go up again, to get even higher, because we are like, let me redraw the chart. As you can see, we are going up. There's no reason why I should take sell here, right? You are going up. When you're going down, we take sells. When you're going up, we take buys. Simple. The trend is your friend, right? So let me see here. I thought that we came here, we started rejecting, and that was a good sign. But I wasn't in a rush. I wanted to see a good confirmation, because I already made enough profit. I don't want to risk my profit in a trade that I don't really trust. You feel me? In a trade that I don't really feel. So I waited. I liked what I was seeing here. When the price started going up, I was like, okay, if the price, let me delete this. If the price close above here with the body, I'm in the buy again. So I waited for that. Was it there? Yeah. Okay. I waited for that. Or was it here? Hold on, let me see. Okay. Oh, okay. I waited for the price to close above this one. My bad. Above this one. So when the price closed above here, I waited for a retest. I put my buy limit entry here, and I put my stop loss here. I like, 1, 2, 3. And it was already a major high, so it's already a major high. I got the 1, 2, 3. What's the one here, right? Yeah, it was already a major high. When I saw that, I was like, oh, hold on, my bad. I was like, okay, if the price come here and start acting up, I'm out. But the price didn't, and as you can see, let me You see, the price came like went over the touch my stop, touch my I mean touch my take profit, and started like acting up a little bit. I don't know if you continue up. See, and it kept going up. I don't even know if it kept going up here, but let me check. Retest, and like look at this. Your price started acting up over here. But yeah, so that's about it. That's my live trading. Let me show you guys my dashboard. A dashboard for that account. As you can see, as you know, I took 3 trades, 3 wins. That means like that's like 100% win rate on that account. So as you can see here, we are on my dashboard. Like I said, let's go into trading history. I took 3 trades, 3 wins, 100% win rate, good, 6.7%, good. Now we wait for the payout. As you can see, let's go on the trading view. Trading days. It was only one day. You see, I opened three trade that day, and I haven't traded since. It's been like almost 2 weeks. Let me see. It's been 11 days, right? I haven't traded since that day. I'm waiting for my payout. There's no reason why I should continue. And guess what? Even though I stopped trading that on that account, I kept winning on other accounts. If it was another person, it would be like, oh, maybe I should continue trading that trade. I should continue trading that account and make more money. After that, I passed another challenge, right? I passed another challenge, which means like 8% and 5%, both combined, that's 13%. If I kept trading that account, I could have made 13% more. But that's not very realistic at all. I don't want to risk a good amount of money that I already made. $1,200, that's not bad at all. I'm gonna take my payout, go buy even more challenges, continue trading, and continue scaling up my capital, my portfolio. Yeah, that's about it. So that's about it, guys. Thank you guys for tuning in. If you made it that far in the video, make sure you leave a like, comment the video, and share if you want. So that's about it. And if you guys like this type of video, make sure you let me know in the comments. And thank you for watching. Peace.